Okay, all right. So the last time we had this voice chat, I think was Thursday last week, if I remember correctly. Probably Thursday or Wednesday when we had this dip going on. Actually, it was in the morning of Friday, if I remember correctly. And our idea was that we are going back to 6,000, somewhere around in this region, in this supply zone, and that happened quite quickly, right? And yesterday I started closing most of my long position. We closed some on Monday, we closed Tuesday, and yesterday as well, right? So decreasing the positions because we knew that when we are going into the supply, we'll have some challenges there. And probably, if there would be a bearish thesis to come into the play, then it's going to start from here again, right? And our bulls line in the sand was this particular level, 5980, that so that if it has to continue in a 1-2-1-2 formation, which was 1-2-1-2, and then 3-4-5, and completing a 3, then a 4 and a 5, it should start from here, which kind of got invalidated in the morning. And then the next thing comes to mind is that what if this was either just a zigzag, which is your ABC wave, because we see a clear 5 here, and then 5 going up as well, right? So that becomes our scenario number 3, actually, not 2, because 2 was still kind of bullish, which I was shared. So this is an ABC, but since I have this marking right done here, let's just talk about scenario 3, which is more of a bearish one, which is where you had this impulse down, and post that you had a zigzag retracement up, and you will see another corresponding impulse down like what you had here. Another impulse down will come, right? So that's where this beer gap, where I said, is very important, that between today and maybe Monday we see another pop, test this beer gap, which is at 60006, and from there the sell starts. Can it start from 5980? Yes, it can. I mean, if I just look from the retracement level perspective, I think it was less than 50%, probably maybe 38%. Yeah, somewhere around that, right? So, but I'm looking at somewhere above. 61% is exactly into that 6,000 ballpark. So it would be a good place to look for a short from that perspective, because your risk reward is pretty good if you are shorting here, as somebody was asking me the question. Because if you short at 5980, your stop loss will come somewhere in the 6030, 604 range, or a new high actually, and that's too far, right? And if I'm shorting up here, then it kind of makes sense, even if it's our bull scenario 2, where we only drop down to 5900. It will still make sense that you have a 1:2 or 1:3 ish kind of a risk reward, rather than looking into 1:1, right? Not the kind of place where I would want to be in, where my risk reward is just 1:1. But like I said, this is a bearish scenario, where we have this 4 move here, and this whole move is counted as one big correction started in first week of December, right? So on the larger scale, when you look at, it will still be not into a bearish territory, because if you remember from last week, we are not bearish until we start trading below 5640 or so, until we start trading below this wave 1 range, right? You can still have this as wave 3 and 4, and can still go up and make a 5 or something like that, right? That's one scenario on a, again, first bearish and then bullish after that again. Now there are like different things which will play out here, that what if, let's say, the 5 is completed, and if I have to go even further bearish, let's say this drop happens, we come down here, we kind of get into this 5640 kind of a range after this sell, and then we bounce, probably make another low, right? What does that mean? That it becomes a 5 wave down. Now instead of a ABC, you have 1 2 3 4 5, right? Once you have this 1 2 3 4 5, then you're looking for a bounce again. Bounce back into maybe 5900 or 5866 or something like that. 5866 sounds to be a good number, and then you go down again, right? So this will keep unfolding as we are progressing further, right? So this is like first a small bearish scenario where you just short at 6000, and initial target could be just 5900, drops later on down and make a new low into like this demand zone, basically somewhere around 5700 or so, or maybe 5768. We'll measure as it starts dropping where it is coming, but it's coming down into this demand. If the sell is sharp and starts breaking this demand, uh, we will have some sort of a stop hunt here, completing these 5 waves into this, and then a bounce will come again. This is a super bearish scenario where the top is already in, and market is gonna trend down further from there after this bounce. Now, will it be just an ABC down taking to 5300, another number which I was throwing yesterday into chat, or this is something else? I mean, we'll figure it out when the time comes, right? But these are like the bearish scenarios to keep in mind. Again, this is a scenario number 3 that we started talking about, the bearish scenario. Now, just going back to the other alternate bullish which I had after the 5980 broke. Um, let's just look into it, and then I'll open it for questions. So what if this is not an ABC? Maybe if I have to look into it again, not a big fan of trying to minimize a wave 4 where, but we have seen these things happening, so I can't just avoid it. Where this was like 1 2 3 4 5, a typical impulse wave, though I would wanted it to go much higher, but this is in the supply zone. Wave 1 can be higher, can be longer. Wave 3 cannot be shorter, so it does not invalidate anything. Just not the best of my liking, but again, I mean, we'll keep it in mind because we don't want to be overly short and then get caught later on. So what we are looking at is that this demand was formed last week when this rally happened, right? So when I'm saying that 6K, we have a good opportunity to short, so we go up and then we short at least for this demand, which is like 5900 or 5897 and below into it, right? So comes here, start chopping, and if it bounces back from here, then there is a problem. And if it starts bouncing and recapture something like 5948, the number that we were talking about, then it's hard to be bearish on an action like that. Then it's like ABC, you have a flag down, the flag breaks, and in the first week of January you'll see it running upwards to 6300 or 6200 plus and above, right? So that's gonna be your bullish scenario if this comes out to be the case. So the action that you need to watch for, right? So this will be your 1 2 3 4 5, something like that. um, you can adjust the waves after measuring the extensions, but just a general idea that this is how it can play out if this demand is not taken out in the next whenever that happens. That happens on Monday, Tuesday, don't know yet. But again, both scenarios, the right call to do or right trade to make is that you take a short somewhere close to this 6000. You, of course, your previous high is your stop loss. So that's the trade that makes sense. Whether it comes down to 5900 or it sells down towards making new low below this and keep selling to even make this as another 5 wave impulse down, that's something that we will look into as that happens. But right now, just want to make sure that everybody understands the importance of 6000 and this PR gap. Open for questions. Is it clear? All right, cool. QQQ would be the same thing. We'll just cover that and let's make it quick. We are looking at this bounce to be again, I mean, ABC bounce if it's bearish. We are looking at this range, in particular, somewhere around 526, anywhere about 524 to 526 as a key spot. This is where the supply is. It goes here. You can take a short. Stop losses can be above this high or the previous high, and we are looking at this coming back into this demand zone, right? Which is somewhere at 511. If this demand starts to give up, then we are looking at new lows to be made, and lows to be made, and it could be again a very simple zigzag pattern. That, or if the sell goes deeper, then we are talking about a big first wave being formed, right? So again, something that we will evaluate as that happens, or as that kind of plays out, comes back, comes into this channel somewhere, maybe break it a little bit, just to make it a false break. If this is like again a bullish scenario, going back to a bullish scenario, right? So this 4 comes in here, and then you still have an opportunity for the last long for the fifth wave post this, right? So 1, 2, 3, 4, and a 5. If it will be further bearish, like I said, the sell won't stop just close to this area, this particular zone, right here, right, this demand zone, right, from where the previous rally had started, right, this. So it won't just stop here, maybe a stop loss, and then rally back. But in that case, the sell will be more aggressive, because if this is a wave 3, it has to extend beyond 127% or so. Then we will have a small bounce off of wave 4, and then a wave 5, something like this. And post that, of course, the top is in here, no more new highs, but a retracement back into 512, and then a sell off. Like, that's an extreme bearish scenario, but we are not talking about that right now. We are only talking about that, okay, short 524, come back to 511. If there is more sell, then we are looking at somewhere coming into this demand zone, which is somewhere below 500, between 496 and 500, and then it starts going back up again. So that's what we are going to follow. But if we see something different, we'll of course look into it at that point of time. And there is no need to kind of jump in and try to catch the knife. If let's say the fifth wave has to come, there will be ample amount of time to go long. So let's say this ends here, the wave 4, and you will see a reversal. You will see a reversal breaking the structure, which will be forming on the shorter time frame here. You'll see a new higher high, you'll see a new higher low, and when this higher high breaks above this, you can simply go long for the fifth wave, right? So there is ample amount of time to go long with confirmation. You don't have to be the first one to catch the knife. You do it with TQQ, or you use SPXL, or you use any long-term options. That will be your choice, but this is gonna be our plan in case we make a new and this demand breaks. And kind of that is all. If there are any questions, let me know. Good deal. Looks like everybody's clear. Anything else we want to cover? Let me just stop the recording to make it